Today we're going to be discussing how you can calculate tax deductions for the business use of vehicles. So there are two methods that you can use for calculating auto deductions. Those two methods are going to be the actual expense method or the per diem method. One or both of these methods may be available for you to use in your business. So determining which method is available for you to use depends upon the type of the legal entity and who owns the vehicle. In other words, whose name shows up on the title for the vehicle. If the business owns the vehicle, then the only method that is available to calculate tax deductions will be the actual method. Under the actual method, the vehicle will be capitalized as a fixed asset and depreciated. The books will show any liability related to the purchase of the vehicle as well. All expenses relating to the operation of the vehicle should be paid by the business. To the extent that the business permits the vehicle to be used for personal or commuting use, the value of that usage should be included in the employee's year-end W-2 as taxable compensation. We also recommend that you have a discussion with your insurance agent and make sure that it is being covered under a commercial insurance policy. If the vehicle is owned by an employee or an owner, the rules are going to be a little bit different. In this scenario, the only way that a business deduction can be calculated will be using the IRS per diem method. All expenses related to the vehicle should generally be paid from a personal bank account and not the business bank account or the credit card. The owner of the vehicle is entitled to get reimbursed for the business usage of the vehicle by submitting an expense report and providing a mileage log documenting the business miles driven. The reimbursement rate will be based on the IRS per diem rate multiplied by the number of miles driven for which are being claimed for reimbursement. The IRS publishes the per diem rate every year, so you'll have to look it up on an annual basis and update as needed. The IRS per diem rate is intended to cover all expenses related to the usage of the vehicle. The business should not be paying or reimbursed for any other vehicle expenses. Regardless of the method of calculating a business tax deduction for vehicles, it is crucial that a mileage log be maintained. A mileage log demonstrates the date of the vehicle usage, the mileage, the distance of the trip, where you went, and the business purpose of the trip. If you are audited, the first thing that the IRS will ask for is your mileage log. If you do not have a mileage log, your business mileage deduction will be disallowed. There are two digital options for tracking business mileage. The first one is going to be MileIQ. MileIQ is our recommendation. It is super easy to use, has a lot of great functionality. There is a small cost associated with this application, but I think it's worth it. If you're using QuickBooks Online, you've already got a mileage tracker available to you. If you have access to it. I don't like the QBO mileage tracker nearly as well as a MileIQ. It lacks a lot of functionality and it's just a little bit harder to work, but I do want to point this out. It is an option that you currently have. Keep in mind that only business mileage counts towards a business tax deduction. In other words, if you've got this vehicle that's being used for commuting miles, for example, from your home to your primary place of business, that is not business mileage and shouldn't be taken into consideration for calculating a tax deduction. And neither should personal trips. Those also don't factor into it. That's a very quick overview of how to calculate tax deductions for business autos. If you have any other questions, please feel free to reach out to us.